Welcome back, everyone. It's Sunday, August 20th. I hope you're having a great weekend. I'll be covering Friday session on the daily podcast today. I want to welcome everyone back, as well as invite and humbly welcome all of the new subscribers that are finding me through the exciting feature on Substack this week. I believe we've generated close to like 300 to 400 new subscribers. So really thank you for subscribing as well as following on Substack Notes. I will work very hard to keep you guys entertained as well as educated and continue building this community. We have surpassed the milestone of 1,000 subscribers over the weekend and over 2,000 podcast downloads across all platforms. So I wanted to take some time and thank everybody. And also, I had posted with no pressure on the chat a opportunity for everyone to just introduce themselves. And I wanted to also reiterate, there's no pressure to do so, right? I totally respect if you want privacy and you just want to kind of lurk and consume the content. I do that in a lot of places as well. But for those that did introduce themselves, I wanted to also thank you very much. Ethan M. coming from the WBD podcast, and he had saw that Doomberg was kind of switching over to Substack Notes, and he saw that I was recommended by Doomberg. So thank you for coming on board. Yuri B., a fellow NYU alum. Thank you. Good to have another NYU alum on board. Victor AJ in Venezuela. From Venezuela, a Venezuelan living in Germany. So welcome aboard. Dr. Devlin Fenton. I hope I'm pronouncing that right. Also from Vancouver. World traveler, serial entrepreneur with a few successful exits and working on a few others. So thank you again. And Stares Lovingly from humid Florida, healthcare professional. So that's something, actually, what I wanted to also address today. Everyone has different backgrounds. So I'm looking forward to hearing about all of your backgrounds moving forward. Feel free to email me at nyugrad@substack.com. Everyone is on a different journey and process for stocks, investing, finance, financial freedom. So I'm always looking to build content for all different levels of skill set and experience, but with the context of a macro lens and a little bit of micro as well. And I'll kind of peel the onion. I promise you, if you follow me for a while and listen to the podcast and consume the content, you'll kind of get my trading style fairly quickly. And I will link for the new subscribers as well as the existing ones some reminder posts in the archive that are really good and handy visual aids on how I look at the markets in the lens, as well as the archive for the podcasts. And just a little bit of more housekeeping. Don't forget, if you don't know already, Substack released a notes feature very comparable to Twitter without all of the hate algorithms and spamming. So check that out. It's just if you go to substack.com and you go to notes, there's a tab on that page, and I'll link it directly to my notes tab, but you can also follow many other great authors, and you'll find some on my recommended list. And then my podcast is available not only on Substack, but also on Spotify, Apple Podcasts, and Amazon Music. Last bit of housekeeping before I jump in. I'm only covering this because so many new folks are here. Although everything is free right now on the podcast, in the potential future, hypothetically, there will be free and paid. So if there is a referral program, if you value the content and you think you know a friend or a family member that might benefit, there is actual referral program credits. So to give you an example, if you get 3 referrals to the Substack, you get 1 free comped premium month. If you get 5 referrals, you get 3 free months, which is a $45 value. If, let's say hypothetically, annually, it's $180 per year. And then if you're able to get up to 25 referrals, you get 6 months comped on the premium service, which is a value of $90 since you're just splitting the 180 in half. With that said, let's just jump in. I'm going to try to get this under 15 minutes. But Friday's session was just basically a bounce. If I had to summarize it like in 30 seconds, it was a little bit of a bounce. We opened up low. There was some pressure overnight on Thursday, but the opening bell was the low of the day, and we kind of rallied a little bit into the close all day. But when you take a look at the breadth, we had 42 new highs, 377 new lows, 53% were advancing versus 41% declining, and 70% of the NYSE, American Stock Exchange, and NASDAQ are still under their 50-day moving averages, which is not good. So I would still say keep an eye out for bounces up to the 50-day moving averages. See how prices react once they get there. What stuck out to me at the open on Friday, crypto had a very hard sell-off. It continues to sell off. So it seems to be risk off in the crypto arena right now. Also, pre-market, Asia was very red. So there's still problems in China, Hong Kong, China, Japan. All of those Asian markets were selling off pretty hard at the open or pre-open. When the market opened, we were down 176 on the Dow. On the S&P, we were down like 0.6%, 27 points. So it looked like we were going to just keep bleeding into Friday. But that open got bought and breadth picked up. And we just kind of slowly trickled our way up to that horizontal line, which I've been mentioning, 43.68. We tested it a few times. Then we finally broke through 43.68. And then we back tested around noon, successfully holding it, and then we tried to rally again. We back tested it again like around right before 2 o'clock New York time, and we were just kind of in that range of 43.70 to 43.85, and we closed near the highs, but it wasn't anything crazy as far as a strong bounce. Like the Dow closed up 25 points, the NASDAQ closed red 26 points, S&P closed down 0.65 points. So it was pretty much an even day. It was just, a win for it not to keep bleeding out as it has been. Yields are still very high. You need to watch yields, the 10-year, the 2-year yield inversion curve right now. The 30-year mortgage right now is at an all-time high. When I took a look at some of the sectors on Friday, I think I mentioned this on the Substack notes. It was a pretty even day. Energy was up the most. That's not too bullish. Consumer defensive was up the most after energy. Utilities after that. Real estate after that. So when you have energy and consumer defensive leading, that's not bullish. A lot of the tech names and consumer cyclicals, say that 5 times, were in the red. And when I take a look at kind of the heat map of what was moving, if I cover, like, let's say the Magnificent Seven, right? Microsoft was down 0.13%, Apple up 0.28%, Nvidia down 0.1%. So it's like basically a non-event. Google was down 1.8%, but it was up a lot on Thursday. Tesla was down 1.7%. I think that has to do with a little bit of interest rates being high for car purchases, as well as China. But that was kind of the day. It was kind of a non-event day. It was just a defensive day pretty much. And next week, you have NVIDIA earnings on Wednesday. That's the last of the Magnificent Seven. And Jerome Powell speaks on Friday from Jackson Hole. So you want to watch out for those headline moving events next week. But without many news flows scheduled outside of that, it's really up to price now. Like, will the buyers show up to defend and try to test the 50-day moving averages above? Or are we going to continue to see selling come Monday? So let's watch and see what prices tell us. Again, I want to thank everyone who has joined the Substack. Really humbling, to be quite honest, to have so many new subscribers, and I'm going to make sure that I do a good job of continuing producing good content. Again, feel free to email me suggestions, comments at nyugrad@substack.com. Thank you again. I'll see you on the next episode, and have a great rest of your day. Bye.